Okay. We have to talk about the CPI expectation yet again. Okay, so by now, if you're watching this video, chances are CPI is going to be dropping tomorrow. Again, it's going to be one of the biggest CPI report that we're going to be getting, simply because right now we are on thread. Okay, we're threading a very, very thin layer of water with the Feds, with the economy, and everything. Okay, so let's get down to it right now. Inflation is horrible, and I think that it is very, very evident that inflation is going out of control. Okay, right now, if you're actually looking at a lot of publications out there, okay, people are saying that CPI expectation is about 0.5% or 0.6% or even 0.7% month over month increase. Okay, this is 2 months back we are thinking that, oh, we are going to go into deflation, but right now we are going into even higher inflation. We're not even plateauing anymore. We are even going high, over and beyond. Okay, so we're going to be talking about why this might be the case, and of course, I'll give you guys my own personal expectation of what's going to be happening. Okay, so of course, it's very, very clear today. We already know what's going to be the important causes or um, the base contributor to why we are getting this big of an inflation. Okay, we're going to see oil prices. Let's be honest here. However, you do have to take into consideration that this is going to be mirroring CPI from September. Okay, so it's not for October. Okay, it's going to be mirroring what's happening in September, which means that you don't have the whole entire Russia Ukraine having an escalated level of warfare, possibly even nuclear. We do not know for now. Okay, so that's going to be not part of this data set. The next one is OPEC, basically cutting down on production for oil and natural gas throughout the whole entire world. That's also not really being shown into this either, because we have to cut it off on the last day of September, and all these news actually don't. No, the last day of September, and these news are not actually out there. Okay, so we can actually take those into consideration. However, I do expect oil prices to be slightly tipping upwards a little bit. So, of course, there is a good chance that we might see, natural gases, oil prices, whatever it is, that to still be one of the headlining contributing factors for why CPI, inflation data is going to be going up. All right, next up, we have to talk about one of the core things that has been actually going on over and over and over again, which is food prices. Okay, I think food prices has been destroying everyone. Okay, food prices year over year is currently at like 12% or something ridiculous, 12 or even 14%. Okay, and I'm talking about food as a whole. Okay, so if you actually were to point out a single food commodity group, there's a good chance you might even see 20, 30, or even 40% increase. Okay, look at eggs. If I'm not mistaken, eggs in Singapore, the CPI is actually reflected to be about like 25% increment. Okay, if you look at, I think it was minced beef in the US, I think it's up by like 17%. So all these kind of numbers, okay, we are just taking food as a whole, like food as a whole entire category. Year over year, it's already up like 13, 14%. So of course, there is a good chance that we might still see persisting inflation happening for the food sector as well. So I do think that that's not going to be changing, simply because we haven't really seen any difference that's actually happening at the moment. Okay, and what's even worse is the next CPI set that we're going to get is going to be even worse. So just think about it this way, okay? How bad the market is going to get destroyed. Just think about it this way. Okay, if we don't have a good CPI reading for this quarter for this month, okay, next month you're going to be adding in pressures from Russia, Ukraine, and the whole OPEC situation. Oil prices is going to spike. Food prices is going to spike. Commodities such as your copper, your wheat, all this spike. So just think about it this way. If this current month of a CPI, let's just say we are getting, I'll just be, base case, or even like, let's just say we be lenient about this whole entire thing, okay? And we just say that, yeah, maybe that, CPI could be 0.2%, for example. 0.2%, the market is going to hate it anyway. Okay, the market is not going to like 0.2% because the market wants to hear deflation happening. The markets want to hear 0.4% negative. We want to see deflation happening. And we cannot keep on seeing all this continuing inflation. Okay, so it's definitely going to be horrible for the market, no matter how you actually see it. Which is why today, well, I'm recording this on a Tuesday, so too bad. Okay, you guys will just have to take it as it is. High chance I'll actually be looking into selling calls. Okay, that is most likely what I'm going to be doing. I'm going to be selling out of the money calls and try to see what I can do with it. Just get some premium by the side, and hopefully, I don't get destroyed so hard when the CPI that I actually drop. So that's going to be one thing. Okay. Of course, I don't want to be so forward-looking to the fact where I'm actually talking to you guys about what's going to be happening next month. But I'm just telling you, okay, if in my base case scenario, I'm already looking at the fact that we're looking at 0.5%. Okay, no, 0.2%. 0.2% as a base case scenario as it is. The market is not going to like it as it is. Next month, the market is going to get destroyed because we're most likely going to be seeing 0.8% or even 1% month over month. And that alone would most likely be one of the main contributor to the official recession. So yeah, I am a little bit worried. I'm not going to lie, simply because I think this is currently in a very troublesome market. I think there's a lot of headwinds along the way, especially with geopolitical tensions. I think there's nothing that's really stopping the geopolitical tensions, especially with Russia's bridge being attacked and Ukraine basically being caught as the main suspect, and then afterwards getting destroyed. The entire Kiev is right now is in ruins. So geopolitical tensions on its own is going to easily be one of the core contributor to all the supply chain issues coming in as well. Okay, just think about it. On the 24th of February, when the first official war happened, okay, that basically just destroyed the market. The market fell like 8%. Like SPY dropped like 8% in a day. Like, come on, like 8% for an index fund, crazy. And 8% drop on SPY, and afterwards, basically, people tried to recover a little bit. People thought that, oh, okay, the worst is over. War is one of the worst things in the world, and with war over, everyone thought that all's good. Okay, we're fine. Okay, let's continue on. But yeah, the headwinds are still there. Okay, the supply chains issues are still there. Just look at from February all the way till September. Till August actually. Okay, you're gonna look at all the CPI, and none of them actually looks good. Other than the fact that for 2 months ago where we actually got that 0%, but other than that, every one of them looks bad because of the whole entire war from the 24th of February. Oil prices went up, which is basically the only news that you're probably going to see about CPI for the past 5 months, because everyone's talking about how oil prices is just going through the roof. Okay, food prices, people don't really talk much about it, but it is a huge factor as well. If you actually do it, like I said before, we do year over year, it's about 13%. And if you were to actually analyze it, I think it's about 15% or even higher. So, okay, so those are really huge factors that I actually am looking at as well. And another factor that I also want to add in too for this video as well, which is rentals and also housing, shelter in general. I think that is going to be a kind of like a wild card. I'm not sure if it's going to be going up a lot or it's going to be going down a lot, simply because at these kind of trying times, a lot of people need money and people are trying to just store money. They want to have cash. Everyone want to be cash. Everyone want to be liquid with all the money that they can have. And that's why people would sell a lot of their houses. Okay. And I'm sorry. Yeah, and because you want to sell all your houses and you want to make sure that you have liquid cash. But that's not the case. If rentals are going through the roof, people would definitely want to have houses to actually go through with the rental to actually get rental income as well. So I think that it doesn't really make sense how this whole entire thing is going to be working out for rental and shelters side. But yeah, I think that this is going to be very, very interesting. But my own personal expectation for the CPI, I'm thinking right now it's most likely going to be like at 0.5% month over month. I think the core CPI, we might actually see a fluctuation from 0.4 to all the way to 0.7. I'm not very sure how that would actually work out. But yeah, that's all for my expectation video. Hope you guys enjoy this. And of course, if you guys have not get your free $130, 130 USD worth of free Tesla shares, okay, use my link down in the description box below. Go over to Webull, okay, just sign up, deposit 2,000 Singapore dollars. Okay, this is only for Singapore audience, okay? Just sign up using my link and deposit 2,000 Singapore dollars, make one buy trade on any US stock or ETF, and then one buy trade on any US option, and just keep the initial $2,000 that you actually make as a deposit and keep it there for 30 days, and voila, 130 USD worth of Tesla shares. Anyway, use my link down below to get some free money, because why not? But anyway, that's all I have for this video, and I'll see you guys in the next one.